How credit scores work. Learn how to boost your credits. If you live in the United States, your credit score is more than just a number, it's a financial passport. This 3-digit figure can determine whether you qualify for a mortgage, get approved for an apartment, or even land certain jobs. Yet many Americans don't fully understand how their credit score is calculated or how to improve it. According to 2024 Experian data, 90% of Americans check their credit scores regularly, but not all know how to interpret or strategically increase them. Whether you're just starting your financial journey or trying to repair past mistakes, mastering the credit system can save you thousands of dollars over your lifetime. Your credit score is calculated based on 5 key factors. Payment history, 35% of your score, is the most important. Missing even one payment can drop your score significantly. Credit utilization, 30%, measures how much of your available credit you're using. Keeping this under 30% is ideal. Length of credit history, 15%, rewards you for maintaining long-standing accounts. Credit mix, 10%, looks at the variety of credit types you have, credit cards, auto loans, mortgages, and new credit inquiries, 10%, track how often you apply for new accounts. Understanding these categories can help you target the areas that will improve your score fastest. If you want to boost your credit score, start with paying all bills on time, including rent and utilities. Some rent reporting services can even add on-time payments to your credit history. Reduce your credit card balances to keep utilization low, ideally under 10% for maximum benefit. Avoid closing old accounts, as they help your credit age, and limit new credit applications to avoid multiple hard inquiries. You can also use tools like Experian Boost, which factors in your utility and streaming service payments, or become an authorized user on someone else's well-managed credit card to piggyback on their positive history. Over time, these strategies can raise your score and save you thousands in interest and fees. Understanding how credit scores are calculated. Most credit scores in the United States are calculated using the FICO or VantageScore models. These scores typically range from 300 to 850, with higher numbers indicating stronger creditworthiness. The main factors are payment history, 35%, amounts owed or credit utilization, 30%, length of credit history, 15%, credit mix, 10%, and new credit inquiries, 10%. For example, if you consistently pay bills late, your score could drop by dozens of points, and recovering can take months or even years. Similarly, maxing out your credit cards can signal to lenders that you're overextended, even if you always make minimum payments. The long-term benefits of a high credit score are significant. Imagine buying a $300,000 home. With excellent credit, you might secure a mortgage at 6% instead of 7%, saving over $60,000 in interest over 30 years. The same applies to auto loans, personal loans, and even insurance premiums. Many insurers use credit-based scoring to determine rates. A strong credit profile also gives you more negotiating power, whether you're asking for a higher credit limit or better loan terms. In a country where creditworthiness opens doors to major financial opportunities, mastering your credit score is one of the smartest investments you can make. Why credit scores matter so much in the United States. Credit scores impact more than just loans. Landlords use them to decide if they'll rent you an apartment. Car insurance companies in many states use them to determine premiums. Employers in certain industries may check them to assess your responsibility. Even utility companies sometimes require deposits from customers with low credit scores. That's why keeping your score high isn't just about borrowing money, it's about opening doors in multiple aspects of life. Proven strategies to improve your credit. If your score isn't where you want it to be, there are practical steps to raise it. First, pay every bill on time, every time. Even one late payment can have a major negative impact. Second, Aim to keep your credit utilization ratio, the percentage of available credit you're using, below 30%, and ideally under 10%. This might mean paying off balances before the statement closes or asking for a credit limit increase. Third, avoid opening too many new credit accounts at once, as multiple hard inquiries can temporarily lower your score. Also, don't close old accounts unless absolutely necessary. A long credit history boosts your score. Common myths about credit scores. Many Americans believe checking your credit score will hurt it. This is a myth. Soft inquiries, like when you check your own score, do not affect your credit. Another misconception is that carrying a small balance helps your score. In reality, paying off your balance in full each month is better for your finances and your credit rating. And while debt consolidation can help some people, it's not a cure-all. If you keep spending recklessly, your score will suffer again. Long-term credit health and financial freedom. Building an excellent credit score doesn't happen overnight, but with discipline and smart decisions, it's achievable. Over time, a high score can unlock lower interest rates on loans, saving you tens of thousands of dollars. For example, someone with a 760 credit score might pay 1% less interest on a 30-year mortgage than someone with a 650 score, a difference that can add up to over $50,000 in savings. Treat your credit like an asset. Protect it, monitor it, and use it strategically to create opportunities for yourself and your family. One practical step that many Americans overlook is the importance of credit utilization, which is how much of your available credit you are currently using. Experts recommend keeping your utilization below 30% of your total credit limit. For example, if you have a $10,000 limit across your credit cards, try not to carry a balance higher than $3,000. Even if you pay your bill on time, maxing out your credit cards can hurt your score. A simple strategy is to make multiple payments throughout the month, not just one at the due date, to keep your reported balances lower. Another powerful tool is to take advantage of free credit reports and credit monitoring. By United States law, you can get a free credit report once a year from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, through annualcreditreport.com. Checking your report helps you catch mistakes, such as accounts that don't belong to you, which could signal identity theft. Many banks and credit card companies also offer free credit score tracking as part of their services. Using these tools regularly allows you to take control of your financial health and make better decisions when applying for loans, mortgages, or even jobs, since many employers check credit history as part of the hiring process. One of the biggest mistakes people make is missing or making late payments. Even a single missed payment can stay on your credit report for up to 7 years and have a major impact on your score. Setting up automatic payments or reminders can protect you from this error. Another common mistake is closing old credit card accounts. Many Americans think this will improve their finances, but it can actually shorten your credit history and increase your utilization ratio, both of which lower your score. Unless the card has very high fees, it's usually better to keep it open, even if you rarely use it. A third mistake is applying for too many new credit accounts at once. Every time you apply for credit, the lender makes a hard inquiry on your report, which can temporarily lower your score. Multiple applications in a short period make you look risky to lenders. A better strategy is to research your options carefully and apply only when you truly need credit. Lastly, some people fall into the trap of ignoring their credit entirely, thinking that if they avoid credit cards or loans, they'll be safe. In reality, having no credit history can make it very difficult to qualify for a mortgage, rent an apartment, or even get favorable insurance rates. Building and maintaining credit responsibly is always better than having no credit at all. The economy affects everyone, including you. But do you actually understand it? For example, why do prices keep rising? Why are some countries rich while others stay poor? Why does your paycheck never seem to be enough? What can you do, personally, to change your financial future? This ebook is exactly what you've been looking for. Understanding Economy: How You Can Improve Your Life is an excellent must-read ebook to help you improve your life. What this ebook will teach you: how the global economy actually works, in simple and practical language. The real reasons behind inflation, poverty, inequality, and wealth. The truth about capitalism, socialism, government spending, and taxes. Why some people escape poverty, and how you can too. How to start your own business, manage money wisely, and protect yourself in tough times. Why crime, corruption, and bad leadership destroy a nation's economy, and what honest people must do. Why sustainability matters, and how a strong economy can exist with a healthy planet. The secrets behind economy, cost of living, interest rates, and personal wealth building. How to take control of your financial life, no matter where you start from. And much more. Many people are buying this ebook to better understand how the economy works, and thus improving their lives. This is not a boring academic textbook full of formulas. This practical guide was written so people can improve their lives. This ebook has about 480 pages, explained in a simple way so that everyone can understand economics. This ebook is perfect for you. Can you please buy this ebook and at the same time strengthen this channel? You will learn how the economy works and how you can benefit. As soon as you make the payment, you can instantly download this excellent ebook. And you can start reading it and benefit greatly. Very easy. Learn economics through this book, take control of your future, and help others too. A small investment that will transform how you think, act, and thrive. Don't just survive the economy, understand it, and use it to totally benefit you. Could you please buy the ebook, like this video, write your comments and watch the other videos of this channel? Thank you very much for watching this video.